think Bitcoin will also demonetize gold when we hit probably 500,000, because at that point we're roughly half of gold's market cap. And the more modern thinkers or in investments and funds and institutions will likely start to reassess and reevaluate their gold holdings relative to Bitcoin holdings. So it's likely that we will demonetize some of gold's market cap. But gold, I think, will still hold out better than everything else. So I think it should revalue itself a bit more.
Samson Moe rejects the notion of diminishing returns and questions the conventional wisdom on the price cycles of Bitcoin. He contends that the rise of Bitcoin is a fundamental change, analogous to water changing from a solid to a liquid or gas rather than merely another market trend. This change signifies the transition from a monetary system based on currency to one that is controlled by Bitcoin. There is no reason to anticipate diminishing returns if Bitcoin eventually takes the role of fiat currency. Moe thinks that Bitcoin's eventual dominance will make fiat pricing obsolete, much like the transition from horse-drawn carriages to vehicles wasn't measured by declining returns, but rather as a total revolution. In this scenario, which he refers to as hyper-Bitcoinization, Bitcoin will serve as the global unit of account and medium of trade. Take a moment to like this video, subscribe to the channel, and turn on notifications for more content on Bitcoin and the digital asset space. Also, drop your thoughts in the comments below. It helps with the YouTube algorithm and supports the channel. Thanks, and enjoy the video.
So my theory is that maybe some Bitcoiners won't like this answer, but I think gold will run up because the trading pair of the future is not BTC USD, but BTC XAU. Because at the very least, gold is a relatively finite asset that you can't manufacture out of thin air. The exact verifiable quantities, it's kind of TBD, but at least it's better than everything else. So I think if there is trading of Bitcoin, it's going to be against the ounces of gold rather than against dollars or yen or pesos. So with that in mind, you could expect gold would probably have a run. And maybe with the push for things like auditing Fort Knox, we actually have a better visibility on who has gold, and we kind of level up a bit. I think Tether and their product, Tether Gold, is probably a step in the right direction. They are far more stringent on how they're managing and tokenizing bars of gold than what is currently used to trade and value gold on traditional markets. I don't really believe that there are diminishing returns for Bitcoin, simply because Bitcoin is a replacement for fiat money. So it's better to think of Bitcoin's growth as a phase transition from one state to another, from solid to liquid or liquid to gas. And it's just a replacement of a current system. So if Bitcoin does replace fiat, then why would there be diminishing returns? You don't really frame automobile adoption from the horse and buggy as diminishing returns. It is a phase change. We just went to automobiles and we stopped using horse and buggy except for recreational reasons, right? Like for fun. So if Bitcoin, it does do what I think it will do, then you kind of just replace everything, and everything is on a Bitcoin standard. Well, price is only a metric until hyper-Bitcoinization, and at that point, there is no price of Bitcoin. It's just sat. So, people like to joke at Bitcoiners saying 1 BTC equals 1 BTC, but there is some profound truth to that, because that's really all that matters. That if the world is priced in sats, which is Bitcoin, then nothing else really matters, because everything is using this system of measurement. So I guess the real measurement of Bitcoin that I would look at is adoption, like how many people are using Bitcoin, spending Bitcoin, and transacting it in economies around the world. And that's the difficult thing to measure, because if Bitcoin functions as money, you should not have visibility directly. So it's sort of like a measurement that cannot be directly gauged, right? On-chain data is flawed because it only measures a certain dimension. And with Bitcoin layer 2s like Liquid and Lightning, a lot of that no longer is factored in, and Lightning has that privacy dimension to it. as does Liquid with confidential transactions. So it's almost like if Bitcoin succeeds, you're not going to be able to measure it empirically, but you're going to know because no one will accept anything but Bitcoin. Gold has a large, let's say, large place in society, and it does have history. So I don't think it'll disappear overnight like everything else. I think it'll hang on to, hang on to the financialization aspects for some time. But I think Bitcoin will also demonetize gold when we hit probably 500,000, because at that point we're roughly half of gold's market cap. And the more modern thinkers or in investments and funds and institutions will likely start to reassess and reevaluate their gold holdings relative to Bitcoin holdings. So it's likely that we will demonetize some of gold's market cap. But gold, I think, will still hold out better than everything else. So I think it should revalue itself a bit more.
Samson acknowledges that while many governments are exploring central bank digital currencies, he doubts they will gain widespread adoption. While some view CBDCs as a tool for financial control, he argues that many governments are pursuing them simply to appear technologically advanced, rather than as part of a true strategy. The same applies to the proposed BRICS currency. It might be more about political positioning than a real shift in monetary systems. Ultimately, Mo believes that governments will be forced to adopt Bitcoin, as citizens will drive the demand. Governments follow value, and they can't control what people deem valuable. Now, let's dive back and hear what he has to say.
I don't really see the point of a new currency, and it kind of you can kind of compare it to, like, let's say a failing state relaunching their currency. Will the citizens accept that reboot when there is an alternative like Bitcoin or even stablecoins for that matter? I think the answer is no, because the reason countries can get away with reboots in the past is because there is no alternative. But with the dawn of Bitcoin, you can opt out. So I think it's hard to launch something like a BRICS currency in this day and age, where the political aspect of it is also something that cannot be ignored. But that's even more precarious right now. Like the trust that is needed to establish something like a BRICS currency is not something you can project out 10, 20 years. Are those alliances and relationships still going to exist? I think it's a big question mark. So the future of the BRICS currency is definitely an even bigger question mark. That is, if they can get it off the ground. But maybe it's just a nothing burger. Like, a lot of countries like to say they are working on a CBDC, and it's not necessarily that they want to enslave the population or control everything. Definitely a possibility and something we should be cognizant of. But they can also just be saying we're doing something to say they're doing something to look like they're on the cutting edge and relevant and, high tech. And maybe it's the same with the BRICS currency. It's just we're doing something, and that's something they know will not work either. But ultimately, all these countries are going to use Bitcoin because their people are going to use Bitcoin, and governments usually end up using what the people deem valuable. They can't mandate value. I mean, that's what fiat is, and fiat has been failing for the last 100 years, a couple hundred years. You could say that hash rate precedes price, and it is the case right now, but I don't think it is an indicator in the long run. Hash rate to me seems to more measure nation-state adoption for mining, because while countries don't necessarily declare it publicly, they are mining, and that was the case for Bhutan. We didn't know until they kind of got caught, because they were involved in the Celsius case, I believe. So they can mine, and the reason why hash rate seems to be on a tear, in my view, is that it's countries mining that are price insensitive. They don't really care about the price of electricity because they're behind the meter. The energy is their own, and either it's curtailed and run off, or they can just say we'll use Bitcoin to mine, and it belongs to the state. So it doesn't matter really if the price drops or if the price goes up, because they will mine regardless. And I think this will continue to be the trend in the future, because energy production and Bitcoin mining are two sides of the same coin, because you need to be able to utilize energy. You have a lot of excess energy and you have to get rid of it somehow in certain situations. So energy companies will just become Bitcoin miners. And as we build more energy production facilities, then hash rate should logically keep following that growth trajectory. But there's also a danger, I think, to saying that hash rate and price are linked, because one day, maybe 50 years in the future, hash rate could taper off or drop off simply because it's not as economically viable to bring on miners to mine at that point, when the subsidy is a lot lower or fees drop or various reasons. But that does not mean that the Bitcoin network is less secure, because it's almost as if we have an oversupply of hash rate, and the natural equilibrium could be a lot lower, and you can still have the same level of security too. So I think if you just say hash rate has to always keep going up, then you're opening the door for some future FUD attacks where, the media saying Bitcoin death spiral because of mining death spiral. But we can actually make do with a lot less hash rate. It just means maybe you make smaller transactions per transaction. You're not transacting 10, 20,000 coins, but you break that up into 10 transactions of 1,000, and you wait for more confirmations. But the Bitcoin network is very resilient in that regard. Well, there's a lot of expectations, I believe, because Howard Lutnick, he's also slated to be there. And I think he's heavily invested into Bitcoin. He has stated that there will be some word or maybe a reveal about what will be in the strategic Bitcoin/crypto reserve on Friday. But it's to be determined. I think the list of guests is very telling, and the name is Crypto Summit. It's not Bitcoin Summit. So you kind of have a lot of crypto altcoin people there, basically all of them, and a very small contingent of people I would qualify as Bitcoiners. So on the Bitcoin side, you have Saylor, confirmed, and then Paolo Arduino from Tether. I consider that a Bitcoin company because they're just using dollars to earn Bitcoin. He is in the unconfirmed list last I checked. And yeah, the rest is basically every other big crypto company. So we'll see. But I'm not that hopeful on a really good outcome, but I hope there is a good outcome.
Samson Mow breaks down the changing relationships between government policies, Bitcoin mining, and the direction of world currencies. He questions the widely held notion that price rises are directly predicted by Bitcoin's hash rate, which measures the network's overall processing capacity. Samson contends that increasing hash rates are a better indicator of the uptake of Bitcoin mining by nation-states. Several governments are already mining Bitcoin secretly, he says, including Bhutan, which was only made public because of its involvement in the Celsius bankruptcy case. Because they use their own energy resources, these countries, according to Mao, are price insensitive and will continue mining regardless of changes in the price of Bitcoin. He views energy production and Bitcoin mining as two sides of the same coin. He believes that extra energy will be increasingly transformed into Bitcoin, which will propel future hash rate growth. Samson cautions against thinking, nonetheless, that Bitcoin's security and hash rate are inextricably related. In the far future, the hash rate may naturally drop as mining profits drop without compromising the integrity of the network. This may cause people to worry about a mining death spiral, but Samson stresses that the Bitcoin network can still operate safely with lower hash rates by using more confirmations and smaller transaction sizes. In the end, Samson thinks that since governments cannot control what people value, they will be compelled to embrace Bitcoin. Governments will be forced to adopt Bitcoin as more people choose it over fiat money. This supports Mo's larger argument that Bitcoin is unavoidable and that the value and freedom it offers are too great for the established banking system to match. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.